Good morning. This is Japanese Economic Review Channel. Looking back at yesterday, April 15, 2026, the market experienced a significant inflation-off, risk-on rally. This shift was triggered by a rare alignment of geopolitical de-escalation and cooling inflation data. We saw the Nikkei 225 reclaim the 58,000-point threshold for the first time in over a month, setting a bullish tone for the current week. Yesterday's performance was stellar across global indices. The Nikkei 225 surged to close at 58,134, while the Nasdaq achieved a rare 10-day winning streak. Two major pillars supported this: a massive miss in US PPI inflation, coming in at just 0.5%, and a sharp plunge in crude oil prices following news of US-Iran peace talks. These factors aggressively deflated higher-for-longer interest rate fears. The primary driver yesterday was the US Producer Price Index, PPI. The actual figure of plus 0.5% created a 0.6% surprise gap below market consensus. Traders immediately priced out hawkish scenarios, catalyzing aggressive buying in the US tech sector, specifically in names like Micron and Meta. This pushed the Nasdaq up by 455 points, providing a massive lead-in for the Tokyo market. We can trace yesterday's rally through a clear causal chain, starting with geopolitics. News of scheduled US-Iran peace talks caused the Middle East risk premium to vanish, crashing NY crude oil futures. This energy-driven cooling of inflation was confirmed by the PPI print, activating a global risk-on environment. This provided the fundamental bedrock for the rally seen across both US and Japanese markets. Yesterday, the Nikkei 225 finally broke its 1.5-month resistance, closing at 58,134. This marked the first close above the psychological 58,000 level since March 2nd. Crucially, the Topix also gained 15 points to reach 3,770, confirming that this was a broad-based index rally supported by market-wide risk-on sentiment. Looking at yesterday's intraday chart, we saw a powerful gap up at the open, driven by the preceding US rally. Aggressive short covering and early buying drove a peak of 58,585 by 10:09 a.m. While heavy profit-taking capped the upside in the afternoon, the index maintained strong foundational support above the 58,000 mark until the closing bell. The quality of yesterday's breakout was validated by robust participation in the prime market. We saw a 2-to-1 advance-to-decline ratio, with 1,020 stocks advancing. Trading volume reached 2.435 billion shares with a massive turnover value of 9.224 trillion yen. This high level of liquidity indicates that institutional investors were actively repositioning into Japanese equities. A clear sector rotation was visible yesterday. Winners were tech-driven sectors like info/comm, securities, and banks, with notable moves from SoftBank Group and MUFG. Conversely, the energy cooling trend hit mining and non-ferrous metals hard. Inpex and Sumitomo Electric saw sell-offs as the commodity risk premium evaporated due to the geopolitical de-escalation. The Growth 250 index also surged yesterday, nearing its year-to-date high of 780. While sentiment spilled over from the prime market, we saw extreme volatility in speculative plays. TENTIAL hit a daily limit up on strong earnings, while the recent IPO Softex plunged after its 4-day limit up streak, highlighting the persistent speculative risks in the current environment. Currency markets provided a stable backdrop yesterday, with USD JPY hovering around 158.93 and EUR JPY at 187.35. This stability allowed institutional focus to remain entirely on geopolitical risk repricing and equity fundamentals. A steady yen helped sustain the attractiveness of Japanese stocks for global macro funds throughout the session. Yesterday's corporate news highlighted a push toward digital modernization. Credit Saison deployed a new AI screening model developed with PKSHA, and Tomato Bank announced it would end the use of physical checks. Additionally, Oryx executed a corporate split, and Odakyu launched a new sign language link service, showcasing broad structural evolution within Japanese firms. Innovation also drove yesterday's consumer sector news. Suzuki launched Suzuki Tegaku My Car 5, an online new car subscription service. FMCG leaders like Calbee and Daidu announced new product rollouts for the spring season. These moves reflect growing corporate confidence in domestic consumption following the market's recent stabilization. To conclude, yesterday, April 15th, was defined by a single, logical trade: the rapid unwinding of geopolitical risk premiums. This triggered an immediate return to large-cap tech and broad market equities. As energy inflation cooled, and the Nasdaq rallied for its 10th straight day. The path for the Nikkei now appears to be trending higher, supported by strong fundamentals. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.